TGIF, everybody. My favorite Valentine was Eddie Murphy in Trading Places. How about you? Who was your favorite Valentine? Is it crude oil? May have missed the low for this counter trend, caught a couple of scalps last week, but we're getting a 2-week reversal here, closing over 51.55. We'll see.
You know, Dale, good morning.
Yeah.
My favorite Valentine is John McClane from Die Hard. Come on, has to be.
Oh, okay. All right. Thanks for chiming in. All right. Yeah, he was pretty cool. So I'm glad it's Friday. How about you, Stel?
Oh yeah, it's been a long week.
Yeah, long week and another negative week in Euro. So we had Peter Goodburn on yesterday. He's talking about 106.80 is his downside target in this for a possible turn. So about 150 pips away from that. And what I'm going to be interested in, and I talked about Euro Pound with him, and you know, I talk about the Euro being the lead indicator for the dollar. You want to see, like today, okay, these are the kind of days when we get a dollar bottom that I'll be looking for, with the Euro on change and cable down 11. Oh, Joe Perry, Joe, I'm blushing. So anyway, where the Euro has some stability and cable's weaker, which means I'm going to be looking for reasons to buy Euro Pound. I know it looks ugly, and I've actually interviewed guys that are talking about a 70 handle. Forgot the name of the guy, but very bearish this, and I could see it. But if we are going to get a dollar peak up around par, and keep in mind that 99.20 is a pretty important area, but if we're going to par, I think one of the better trades is going to be the long side of this. So I haven't pulled the trigger yet. Let's see, it's an ugly week. Should get some follow through into early next week. Just to let you guys know, U.S. is closed on Monday for President's Day. I'm pretty sure we'll be broadcasting, but the markets will be, closed here in the U.S.
We will be broadcasting. We'll broadcast, but
okay.
It probably will be slow.
Okay, so it'll be slow, and we'll be here. With all the risk on, the yen did not make a lot of progress on a weekly basis. I'm kind of surprised with the blow off we've had in S&Ps that we weren't able to do this. I'm still sitting with shorts, losing patience. But look at how it's just hugging this right here, hugging this 50-day moving average here on the 1 hour. And I believe it's coming in again on the 4. Okay, yeah. So here's the 4. Maybe we're going to put in a right shoulder here. I still have to remain negative the yen until I get bullish here. And the 30-year doesn't look great. And yields, I believe, are, unchanged on the week. So, some people, if this is a higher low and we start to go, then the yen's going to blow. I think there might be one more push, and here's the 10-year. Actually, 10-year is giving you a weekly buy signal. That's why it's great to review things on the weeklies, because, you get caught up looking at this, and I'll admit I look at 15-minute charts. And so I don't have a lot of conviction about anything going home, but one thing that does stand out to me is Euro Pound. And if we are going to get a dollar peak, I don't think Euro Pound's going to a 70 handle, because the Euro will lead it when the dollar peaks. And I don't think we're much more than, we could be at par next week, or, maybe it's going to stretch into March, into spring, dollar strength into spring. We'll see. And the only other thing that I'm seeing here is kind of a 3 drive here in the S&Ps at new highs. And, I tried it a couple of times with an 85 stop, 64 sales and 73 sales. And, it worked here for a scalp. And 85 did not get taken out here, and that worked. So even though the market is continuing to grind higher, and look at this divergence, Steve and a lot of traders have brought it up that you could be the wrong way on the trend, but if you pick your spots and you don't get greedy, you can make money on both sides of the market. So I'm trying the S&P again today, and that's about it. Glad to wrap it up. I want to thank everyone for hanging out with us another week. How many people are new subscribers this week? Raise your hand or give me a Y. Oh, that's great. Okay, so if you haven't, Friday's a good day to do it. Get used to navigating around the site. And at first, all the great research could be overwhelming. It's going to take you a weekend just to go through what the team does all week long to prep you in different markets with technicals and fundamentals and takeaways in all the disciplines, in Elliott wave and harmonics, basic, candlestick, and macro. So with that being said, happy Valentine's Day, Blake, and hope you had a good week. It was kind of not that eventful for me.
It was actually very slow for me, and I guess I'm more upset that I didn't catch the euro move. I was just talking to the guys in my office in Greenwich, Connecticut, and they've been all over the euro short, but they've been doing it via options. And they're not just buying small options. They've been playing,
So did any of them like options plays double on a move like this, depending upon the strike and
yeah, I don't ask specifics because when the guys at the Gellos Capital office, we try not to influence each other's trades and ideas, but they were They basically had a lot of puts on the euro, and they're playing the euro and the euro mex to the downside, and they were doing it fairly aggressively. But I don't know what strikes they had, and we try not to do that. We try to talk more about directionality of the market versus how you're going to exercise your position or idea, because our office is just a few select traders. If you guys are not aware, it's just a few of us. I
just know, Blake, I've been right on directionality and options, and at times, if you don't get the Greek right, sometimes they don't even pay when you're right on the direction.
Yeah. So, but
I hate them.
They were doing it more so for and I believe that their expirations were probably here this next week, so it was probably paying 1 for 1. But when you're trading, it's easier sometimes, and these grinding moves that you see here, like in the euro, of being in a put. And in this case, probably a fairly aggressive put, and you're like, okay, my downside's done, and then you're just your profits are exponentially growing as it's moving in your favor, as long as you caught the timing correct. And so anyway, what I'm trying to say is trying to do it via spot, which I don't trade options through our firm. I don't. I'm more of a spot trader, so
I'm a little aggravated with that too. Last week when it felt like we were wrong under we didn't get the cup and handle, and we started taking out I don't know, what was it, 109 and 109.30. That was the time to turn, and I'm still working on that. If sometimes you have to be the wrong way in the market, and if you have the right attitude of being aggressive, well, if it's not right, sometimes it'd be long. Why not just turn and get short instead of just getting out of the way?
Yeah,
You do that?
and that's a difficult
Yeah, it is hard.
to overcome. And just so you know, that was actually up at 110. So that was
Okay.
that was here is like 110,
Yeah.
110, 50, 60. I mean, and you can see
Oh yeah, it was 1040. I tried it. That's
yeah,
right.
we're
Yeah.
two handles lower,
Now
and
I'm even more aggravated.
yeah, now I made you more aggravated, right? Well, the thing is, what we probably should do. Let me pull up a clean chart with the euro dollar, and let's take a look at like the longer term aspects of the euro and where we're at. Let's go over to a weekly chart, and if you look at the
Wow.
euro dollar, this is a
Yeah.
week, right?
Yeah.
So the downside for the euro could be coming in. I mean, we're at the 78% retracement right now, right? You take this low here,
Oh, okay.
and the 78% retracement comes in around the 108 level. A test of the trend line could come in at 107 and change, and that's all. These are all realistic expectations, especially when you had a failed breakout of the uh, wedge. Ah, crap! I didn't want to grab that. Hold on. Now I got to move this. I got to draw it all. Make sure that we're all. So it's something like that. But right now you can see we're in a pretty severe downtrend, and I would venture to guess that there's probably not going to be a lot of support until we get down here to the 107.80 level, maybe.
Yeah.
So that's the 127% extension, 107, maybe 70, but it's bearish, and more than likely we're going to close with a weak. It's going to be a weak euro close. Yeah, it's going to be a weak. So chances are we're going to be able to see below 108 early into next week. Now, I have to say that daily sentiment index is at 8 right now. It's at 8. We can be at 8 for days. We could be at 7, but it is the sentiment is extremely bearish at this point, and it is running at extremes. So you have to take that into account as we're moving lower. So what I'm looking for, it's like, okay, I'm expecting the euro to see some more downside. So that means that yes, I'm expecting a little bit more dollar upside. Where that might translate that I'm looking at is I'm looking at like the Aussie dollar. I actually, I played the Aussie on the long side this week. If you guys don't recall, I was long at like this 107.15, 20. I was pretty aggressive here. It bounced or it rallied to the 24% retracement, which is 67.50. Then the big coronavirus number came out. The big the new way that China is calculating the numbers came out. We dropped pretty aggressively, missed my stop, bounced back into the mid to upper 20s, and that's when I scaled out of it. I said, all right, well, I'm done with it, and I basically made a little bit, but just barely, because I'm like, okay, the euro's too weak right now, where I didn't want that Aussie exposure yet. However, I'm looking at the Aussie right now, and it looks like we might get a move back down towards this. Oops, that's not what I want to do. Down here towards 67 cents, 67.90, which if the euro continues down to 108, the Aussie should drop down to these levels. And so, I am more interested in buying the Aussie down here than where we're currently at. I'd like to see, because then we might actually develop some sort of inverted head and shoulder pattern. The thing I look at the Aussie is that we did have a 10-year low down here. If we can close above this 10-year low, right, that means it's still a false breakdown, and that means that the risk of bounce is still pretty high. Now, one of the things that that you have to think about is China. This coronavirus situation is obviously going to have a pretty negative effect, at least for the first quarter GDP for China. I was reading a Barclays special report on the coronavirus last night and their expectations, and basically they're yeah, I'll just sum it up for you. And this is the title to their analysis: keep calm and carry on, right? So basically they say, yeah, it's going to be a little bit of a drag on, you know, the Chinese economy and maybe a little bit of Europe, but overall it shouldn't, we should have very negative or very little impact for, you know, 2020. And it's, you know, similar to what SARS is going to be, unless we get some sort of acceleration in the coronavirus in the next month or two. But it doesn't seem that way. It seems like, you know, the numbers are improving, and, you know, China is doing a great job of containing. You know, I may be wrong, or they may be wrong, but it doesn't really matter right now, because what really matters is that Aussie, and this is the reason why I'm bringing this up, is because the Aussie is probably going to be seeing very is going to probably start seeing some Chinese stimulus, which is going to help the region, China and Australia. So that's why I think the Aussie is going to be fairly well supported down here. So I am willing to take a shot on the Aussie dollar on any dip down towards, you know, the 60, just below 67 cents if I can get it. Now, can we get it today? Yeah, we have, if you guys don't know, we have retail sales numbers that are coming out this morning, okay? And with the retail sales numbers, you know, it's always hard, and you guys know I'm always in this vein, and it's been more times than not, it's the correct assessment in regards to the U.S. consumer. You don't bet against the U.S. consumer. The U.S. consumer, hey, Americans love to spend money. That's it. And maybe I'm a little jaded where I live, being in Scottsdale, Arizona, where, you know, it's, you know, people tend to spend a lot more than.
It's a patriotic thing to do.
It's a yeah, you know, you love America, spend money, you know that.
Blake,
yeah.
I think my ex-wife must have been at least part American.
she might have been part Scottsdalean.
Yeah.
She was a Gap, a Greek American princess.
So, yeah, maybe.
See, and all gaps are filled, right?
One way or the other. Oh, it didn't mean to turn it into that type of show, but
I didn't mean it that way.
But
that's your mind, bro.
The thing is we will probably have a strong consumer, you know, a retail sales number, which could give the dollar a boost. Hopefully we see the Aussie, you know, trade down to 67 cents or maybe even slightly below. The euro, you know, might trade back to new lows. I was telling the guys in my office, it's like, yeah, I've been waiting to short the euro. I just, you know, I can't sell it down here. You know, I got so many comments from people about the euro. Look, it's too weak to be bought, but it's too oversold for me just to flat out sell it right now. So I just need to see a rally to sell into. So, you know, any move back up towards 108.80 ish, 109, I'm a seller, but it's just waiting for that, you know, move. What I'd love to see is this downtrend that you see here, a severe downtrend. I'd love to see it break. Then some traders get bullish, and then you sell it. You know what I mean? So just, you know,
was that the same time frame in Aussie that you're showing in Euro?
I think it was, yeah.
Because it's a much better looking chart.
Oh yeah, I mean, you know, the Euro's, you know, definitively, or, you know, it's definitively in a trend. So where the Aussie is, you know, trying to base. So anyway, that's how I feel about that. Let's talk really quick, because we have numbers coming out in 10 minutes. We have the U.S. dollar, Japanese yen. The U.S. dollar, Japanese yen could, you know, spike up towards 110. I think that is realistic. You have the 618 retracement of this move comes in at 109.94. Okay. I wouldn't be surprised if we try to attack 110. The one thing that I can't stop thinking about is that the dollar yen, and you guys know this, if you listen here daily, the dollar yen should be a lot higher based on where stocks are at. The thing that's
Blake, can you hear me?
I can, Andre, can you hear
Andre?
me?
Yes. Before continuing with the dollar versus yen, and because you were mentioning the Aussie, the relationship with the Aussie and gold, and because we are now trading that, it's eventually a higher time frame on gold, but we are now threatening that trend line resistance on gold. That triangle that you shared yesterday on the chart of the day, I believe.
Yes, right here.
Do you think there's a possibility for a retest of that structure support again if Aussie starts to pull back again?
Yeah, I do. The one thing, and I was just about ready to go.
Interrupt you because you know that gold is resilient to follow the most recent bearish momentum on euro and actually the Aussie also.
Yes. So just that, let me continue with what I was saying, and because I was going to bring up gold. The thing I can't stop looking at regarding the yen is the fact that gold is so strong. Gold is held up very well despite anything you've thrown at it. I mean, when stocks are as strong as they are, gold should be weaker. It should be. But you could also argue that bonds should also be weaker, but they're not. Bonds are stronger. If you look at the 10-year, bonds are holding up really well. Now, that doesn't mean that they're going to continue, but this, right here, you look at the 10-year, I mean, the 10-year continues to hold up very, very well. So, that's probably the reason why the dollar yen is struggling to make new highs. So on a strong retail sales number, which I assume is going to happen here in the next few minutes, we should see gold move lower, right? We should see gold move lower. We'll probably see the dollar yen move higher, at least back to 110. But remember, this is a multi-year trend line here in the weekly chart. We're still failing to close above 110. And yesterday we had a bit of a, like dark cloud cover developing, especially if we close lower today, which I don't think is going to happen. I'm just, pointing that out. But, like I said, on a strong retail sales number, the dollar yen might get back to 110. The gold market might pull back a little bit, and bonds would also pull back a little bit here. We get the bond market pulling back, but bonds are holding up, gold's holding up, and the dollar yen's not rallying. And that is, to me, very surprising in this environment. I was talking to the guys at, in the office, and we're like, I'm like, aren't you surprised the dollar yen hasn't broken 110? And they're like, yeah, it seems like it's eventually going to break. But remember, the Japanese pension fund, biggest pension fund in the world, is selling at 110. Whenever they're done, if they're ever done, if they ever finish selling at 110, we could probably go substantially higher. But I don't know, I don't know what kind of cards they're holding. And that's the thing about, trading is you take the largest pension fund in the world who's selling dollar yen at 110, as ICT reported earlier this week. How much do they have left to sell? They're buying at 108, they're selling at 110. Do they have unlimited amount of yen to buy when the dollar yen's at 110? It sure does feel that way, doesn't it? Because if they didn't, the dollar yen should be trading at 111, 112. So again, those are just things that I'm, thinking about today as we get ready for retail sales. So before I bring in my colleagues, Steve and Stelios, and obviously back with Coach. If you guys haven't tried out ForexAnalytix, make sure you do so. It's $1 for 10 days. You get the premium version when you're testing out ForexAnalytix, and you also get the app. So make sure you download the mobile apps from the Google Play Store or the Apple iTunes Store. So with that being said, we're going to get ready for the retail sales. Steve, Stelios, how you guys doing today?
Hello again.
Hello.
I'm good.
Hey. Steve, you sound like Fonzie.
How you doing?
What does
that's,
that mean?
That's Joey.
What does Fonzie mean?
Fonzie, you know, the Fonz.
Happy days.
Happy days.
He's too
Oh,
young,
yeah.
man. He's
Oh,
like
you said you were educated in a Greek American school. It wasn't very American if you don't know what Happy Days is.
You know what you call a guy who goes from malt shop to malt shop, hitting the jukebox with his fist?
Fonzie?
A Fonzie scheme.
A Fonzie scheme. That's funny. That's funny, Dale. I tell you, Dale never ceases to surprise me with.
You never got caught up in a Fonzie scheme, Blake.
That is
All right.
funny.
All
right, guys. Well, I just want to say good luck today. I hope everybody has a great Valentine's Day. Remember, it's not too late if you haven't got.
I love you, man.
If you haven't got flowers for your loved one, make sure you do so, and a box of chocolates. Yeah. And we will be.
And then they'll love you.
We'll be here Monday. The equity markets will be closed, and it's President's Day here in the U.S. It's our observed President's Day, but we'll still be here. So
they're
make sure you
changing
guys
it
tune
to
in on Monday.
Emperor's Day.
Yeah, Emperor's Day. All right, guys, have a great one. Steve Stelios, I'm going to turn it over to you.
Thank you,
Take
Blake.
it easy. Take
Thanks,
it easy.
guys.
Have a great weekend, Blake.
You too.
You guys know I can't help myself.
Yeah,
We
we
do.
love you,
Thanks
man.
for accepting me on Valentine's Day.
It's a pleasure.
Right.
You know, guys, I know there's a number coming out, but you know what? I keep reading things about coronavirus that are, you know, now even the U.S. is admitting it's going to be around for a while. They go even through next year. And this, I've seen pictures of people in Singapore emptying out all the stores and everything. I think it's more serious than the media is leading us to believe. Have you been seeing any of this stuff or reading about it?
Just by seeing some of the videos and what kind of precautions they take, I mean, that's proof.
People in suits are getting it. People wearing those suits.
Definitely, things are serious. I mean, it's not some kind of pandemic that's going to wipe out humanity. So, in that sense, it could be worse. But on the other hand, it's more than certain that, quite a lot of people are going to, get it globally. And, many people say mortality rate is around like 2 to 3%, which somebody can say, okay, it's rather low. But on the other hand, we're talking about mortality rate, right? So, 2 to 3% not low if you consider the implications of a human being dying. So, it's not
you
that
could walk
big.
around for almost a month spreading it before you have a symptom.
Yeah, that's also a huge issue. The fact that,
I mean, how do you contain that?
Yeah, it's very tough to contain. I mean, it would be great if you got symptoms within the first 48 hours because it would be much harder to spread. But some researchers claim that can be up to 24 days until you actually get the symptoms, and that's like a huge incubation period. Huge.
Yeah, I agree. And the numbers yesterday rose even more. More cases in Singapore. Actually, there was one interesting one. Apparently, there's a new case in the UK where this person before was at a conference with like 250 people, and I'm going to take a wild guess and say the conference was not in mainland China. It was somewhere else, and with people from all over the world. So, I still think the numbers are underreported. Obviously, I don't know it, but
I think it's a big deal.
Yeah, I agree. I hope it's not, but I think it will.
It'll kill karaoke. Who's going to want to go up and share a mic that people are spitting on? You know what I mean?
Yeah. True.
Well, I have to find a new way to market
would be
myself.
great if it only killed karaoke. I mean, if that was the only problem.
All right, we have the numbers in about 10 seconds.
Yeah,
so
a little bit more than 10
first
seconds.
And see what we have.
Let's see what we get. Expectations are for 0.3, as you see.
In line, exactly.
Exactly in line.
Yeah. Oh, revision
Yeah.
marginally lower, but
Yeah, revisions are lower indeed, but nothing to write home about. So
yeah.
So I'm assuming the market is not going to move following, that numbers.
No. Okay.
Okay, so Stelio, since this is probably going to be a non-event, what else did we have?
Yes. Okay. Data-wise, we had German GDP came in at 0%. So Germany's flirting. We've seen leading indicators go south a long time ago, and the numbers are definitely not looking good. So the lagging indicators like GDP are now starting to turn, unsurprisingly, but it's still at 0%. So no recession yet. But I
Yeah,
wouldn't
but
bet
as
that
it shows, probably going to be tough to avoid it in the nearby future.
And this is for numbers for Q4 before the coronavirus, before the
so probably Q1 of 2020 is not going to look good.
No, I don't think so. So that
Probably
was
it's going to be negative. Yeah.
yeah. So that was one. We also had Eurozone GDP that came in line at 0.1%,
Which is also very, very weak.
which is very weak. Yes, absolutely. And that was it numbers wise. We also had an interesting development from the Fed last night. They said they're going to cut the maximum of the repo amounts that they do every day, and they're going to cut it more than was forecast. So this is going to be taking away liquidity or actually adding less liquidity every day. So the market.
Yeah, because let's stress out here that they've been doing not QE4 in a much larger scale than Q3 Infinity was. So they're going to be tapering off the amount of liquidity going in the system, but it's still going to be huge.
Yeah.
They're cutting it, if I remember, from
big, yes.
122 billion to 100 billion, something like that, Stelio.
Yeah, if I recall correctly, I have to check.
Yeah, just imagine 100 and they have been doing for so long 120 billion per month
for an economy which is really at its best best condition over the past decade or so now. So
it actually isn't, but that's
yeah,
a different
I know,
story.
that's what they're saying. But anyway.
No, I mean, even if we take their numbers, seriously, it still isn't, because the GDP growth under Trump has been exactly the same as Obama. But under Trump, we've had roughly 0.5% of the GDP coming from public spending, which we didn't have under Obama. And we've had debt exploding even faster than under Obama. So, any way you look at it, the economy is not doing better. It's actually doing worse. Because you need even more debt to create the same type, the same amount of growth.
And we all know this in the long term is unsustainable.
Oh yeah,
at least
absolutely. Because real growth is actually negative, because when your GDP is growing more slowly than your debt,
exactly.
nothing left to be said about that.
Yeah. I mean, unless your currency starts getting devalued, which you'll have to at some point, then you just can't keep going like that. But anyway, so that's really it. It's been relatively quiet apart from that.
Okay. Okay, Stel. Okay.
And there's nothing left today. We have Michigan consumer sentiment today and some industrial.
Yeah, I doubt something that's going to move the market too much. If you can do me a favor, Stelio, because I have people here in the house doing electricians work. I joined like 13 minutes late. So are there any questions until 13 minutes past the beginning of the webinar? Because I can't see those.
Yeah, no, there are none.
Okay.
The first question is 16 minutes past. So there you go.
I actually see one at 13 minutes past. Okay, it sounds okay.
Weird.
Okay, thank you. Why were you thinking impact of the euro would be less than the euro? Why you think probably something that Blake said? You think impact in the US economy would be less than the euro? I don't have the context, so I don't really understand the question the way it's been phrased. So if you want to, make it more clear, please. Can I apply for this? Yeah, you can apply no matter where your account is. So FX Trader, I suggest you use. There is a Skype contact in the reimbursement page, so you can directly speak.
I've already replied to him.
Okay.
So
Sorry, Stelio.
so it's in there, yeah.
Yeah, so you can even use the Skype contact here if you want, and they're going to get you set up. Daily waiting on the okay. Spreading, yeah, spreading by aerosol method instead of droplets. Coronavirus, huge health deal indeed. It is. Okay, Aussie and Euro are going to be affected more from the coronavirus. Why? Okay. I assume, first of all, about Aussie, there is no question. We know very well that one of the biggest partners of Australia, the biggest trading partner of Australia, is China. So that immediately answers your question about the Aussie. Now, having to do with the Euro, there is a lot of exporting to China, especially, for example, from Germany. So as you understand, if the Chinese economy gets in trouble, which is very likely, we know that due to the coronavirus, there's been a lot of production going offline. That means a lot less demand for high value, high tech products that mostly come in from Germany, which obviously means that, for example, Germany, which we know is the steam engine of the European and the Eurozone economy, is going to be affected. So, if Germany performs worse, that is 100% going to affect the euro. Okay, so that's the thinking behind why euro can be very much affected by China getting in trouble. Now, that's one of the advantages of the US dollar in this case. In general, it's a huge disadvantage, but with the US exporting less and less every year, at least it doesn't have to worry about that. The US used to be a very, very strong exporting economy, and during the last 30, 40 years, that has completely turned. The US used to be the biggest creditor worldwide, and one of the biggest exporting forces. And since the 70s, roughly, since the 60s, and then more profoundly since the 70s, those trends reversed, and now it's at the exact opposite side of the spectrum. It's exporting a lot less, it's importing a lot more. So at least it doesn't have to worry about that. Of course, would be much better if it was exporting much and getting affected temporarily by something like that, but that's a different story. Now, Persaiger's details on that. If you missed it, Fed to withdraw more liquidity than expected amid funding calm. Yeah, I actually, Baroque, thank you. I actually read about it earlier today. Just noting that despite the reduction in liquidity, if you remember, I don't remember which friend here on the webinar that was actually questioning me like 1.5 months ago, saying that they've been reading that the Fed is going to start drawing liquidity out of the system, and I said no way they're going to be doing that. And proof of that is that like more than 1 month has followed since, and now we're talking about just tapering off a little bit the huge amounts of liquidity going in the system. So the Fed's balance sheet has been explosively expanding, and it's going to continue even if the the rate of expansion becomes a little bit less explosive. It's still going to be expanding in the foreseeable future. And if you want to ask me if I believe there is any chance that they're going to stop expanding it before they accelerate its expansion once again, I would take my bet on the latter coming first. So I don't foresee any real possibility of the Fed stopping the expansion of the balance sheet. Needless to say, I consider it almost impossible for them to reverse course until the next business cycle comes, whenever that is. Now, going back to the charts, and if my cat is polite enough to let me speak. So going back to the charts, I caught most of what Blake said, but I missed the very beginning. So if I repeat something, you'll need to excuse me. Now, having to do with the euro, I know that he spoke extensively about it. Clearly, it remains under pressure, one of the biggest moves we've seen recently, but still remains quite a weak move based on historical standards. We're now trading at multi-year lows. My eyes are set in this confluence of supports at 1078. Also, if we extend this trend line, that's also one to watch. So as Blake said, I 100% agree with him. I wouldn't be buying the euro. I didn't try buying it anyhow at any given point. But on the other hand, I wouldn't be selling down here. So what's 1078, 1075 to 1078? What's that area as support? We might see a reaction from here. But, USD Swiss, from a technical perspective, I like even more. I know that Blake probably didn't mention that. If you remember, I was monitoring this rectangle that we have here in USD Swiss. Actually, last Friday, we were attempting to break above it, and they said that, listen, if we close above 97.50, that's going to be a nice indication that we're headed towards the next objective, which is going to be the 200 daily moving average, just above 98.50. So, from a technical perspective, against 97.50, the USD Swiss looks more decent, and it can actually accelerate higher if, that's a big if, of course, if we see a decent move, a decent rebound coming in from the USD Swiss, from the Euro Swiss, which, admittedly remains, quite weak and under pressure, but we know that at some point the S&P might, step in quite aggressively here. So I would really not be trying to take the other side of this market, not after we've already seen a move from 120 down to almost 106. So if at some point we see a healthy rebound from here, the USD Swiss can actually jump higher just because of the implications for the Swiss franc coming through the Euro Swiss pair. Okay, this question just came in, but since we're talking about the euro in general, the question has to do with the euro pound. So yes, I was anyhow considering addressing this, so I might as well do it now. The euro pound, if you remember, I was monitoring this descending channel, saying that, if we get a clean break above this channel, then I believe we can see a stronger rebound in this pair, with the first objective being at 87 cents. But this never actually came. As you see, we kept toying around with this trend line resistance again and again and again, but we never actually managed to clear the 85-cent level. And of course, the implications of failing to break above it are clearly breaking below it. So we're now retesting the previous low here. And, I have no reason to turn positive this pair as long as we are below 85 cents. So below 85 cents, being bearish makes sense. Above it, I think we can start talking about potentially a larger rebound. But until that happens, the path of least resistance clearly remains to the downside. Now, probably the cleanest of the euro pairs is the euro yen, because euro yen not only broke below this larger ascending channel, which was clearly corrective, it then created this little bear flag. I was expecting a continuation lower. That has already started happening. No real support in sight now that we've broken below that. So I think that euro yen should remain, a sell on rallies until proven otherwise. Also a fast outlook in the euro Aussie and the euro Kiwi, and the reason I'm obviously focusing a lot on it is because during the past few days the euro has been one of the biggest movers in a rather quiet FX market, because those of you that had been trading since some time ago know very well that volatility isn't what it used to be. So in comparison, it looks like it's moving quite a lot, but trust me, that's not moving a lot by
You see your
real.
VIX chart, Steve, and see if today's spike still held the breakout of the triangle.
Oh, you mean the
VIX.
VIX? Okay.
Yeah.
No, I don't think. I think we've actually started,
Eating into it. Yeah. Okay.
eating into it, but still,
Yeah.
the
It's trying to reverse right here is why I'm pointing it out.
Still, the divergence is quite profound, right? I mean,
I'd buy it
we're
today.
we're trading at new highs again and again and again,
I'd
and the
sell it
VIX keeps producing higher lows again and again and again. So
and this higher low, if today's low holds, is really a higher low compared to.
Oh yeah, I mean the previous low was at
glass.
Yeah, the previous low was at 11.8, and today's low was at 13.4. So you know it's quite some distance, right?
Yeah, yeah. Compared to the other one, like you'd need a magnifying glass.
Yeah, and just look at the Nasdaq here, for example.
Yeah.
And if, for example, if you look at the Nasdaq, which has been the strongest, it is diverging on basically every single time frame. That makes sense.
Yeah.
I mean, the daily is diverging, the weekly is diverging, the monthly is diverging, the 4 hour, if we go down to the 4 hour,
all of them are.
Is that,
and
for
that's
example,
the first time in a while that
the 4 hour is
diverging.
The 4 hour is diverging since December 19th.
Yeah.
So we've been diverging since that high over there, and look how many highs we've had following that.
Yeah.
So you know, I don't think this is, you know, really sustainable. I mean, all indicators or all momentum indicators are showing that we're running out of steam. So I think that sooner rather than later,
the minute you give up trying to short it and buy VIX is the time
probably
it'll
that's
go.
when yeah,
and
probably
you can't
that's
give
when
up.
it's going to go.
Can't give up.
So S&P shows some weakness so far here on the 4 hour chart at the 141.4% extension of this correction lower. Now, on the other hand, I like much better the 161.8% extension. So I wouldn't rule out another. Anyhow, it's like 25 handles. What is it? 25 handles for this S&P? It's nothing. So, you know, I would like to see that 34.13 being tagged up here. I mean, it can easily happen within a single day, no sweat whatsoever. But you know, I would be actively looking to sell this market once we see a daily reversal that is worth.
Well, maybe it's today.
About.
So just don't get that other fib stuck in your head, because I've done that a million times. Where you want to get the you want to be perfect. You know what I mean?
Yeah. Now, having to do with, we have questions about gold, silver, and USD CAD. Since we've been seeing them again and again on the daily chart, and on the daily chart, nothing has really changed. Let's have a look at them on a 4 hour chart. So here is silver at the 4 hour chart, approaching once again this formations resistance. I do think that above like 1780, we should be looking at a much bigger move to the upside. And same deal here with gold. Here is gold approaching this triangle trend line resistance. I think that above like 1585 roughly, we should be then looking for quite a big move to the upside. If you remember from the daily chart, my first target following that is going to be at 1625. So I think that breaking above 1585 is going to give us a $40 upside initial target, which is, you know, quite nice to have.
And the short from 16.25 is going to give you $100 or $200 to the downside. Is what I'm waiting for.
I would be skeptical about it, but I mean, let's first get there, and we can discuss about it.
Let's go in there.
Now, having to do with crude has clearly stabilized after retesting that 49 and change low. But if that doesn't really mean that it's going to explode higher. Now, it can extend further from where it currently is. In essence, you can be looking at this range, let's say between 49.30, let's call it, and 52.30. So it's like a $3 range. If we break above this, we can extend towards 55. And if you remember from the daily chart, 55 is the level I said that I'm bearish against. So personally, I wouldn't mind at all seeing a move towards 55, because I will be actively looking for short opportunities if we make it there. Now, it's not even certain that we're going to make it there. I mean, I wouldn't be surprised if we actually end up getting rejected from this resistance and then turning lower from here. But if we do break above 52, I will welcome any move towards 55, and if I see a failure from there, I will be more than happy to short this market, looking for more weakness to follow. Now, the other question about the USD against the Canadian, if you remember, I showed on the daily that we got perfectly rejected from that trend line resistance. You can see it if I zoom out even here on the 4-hour chart. Actually, there are two trend line resistances here. One is this one that I've drawn here on the shorter term, and you can even draw this one. Doesn't look so perfect on the 4-hour chart because those are actually wicks on the daily, but let's make it intermittent. That's the one we're looking on the daily. So USD CAD, if you look here on the 4-hour chart, I've been monitoring this ascending channel. Let's see if it can actually cut some bid now that we're approaching this support. If not, I would be looking for a continuation lower and perhaps finding a bid closer to that area for a move higher following that. Okay, so USD CAD against 133.20. You know, the closer we are to that level, doesn't make sense trying to buy it, but I would definitely be looking for an opportunity to buy it closer to 131.50. And having worked out the overbought conditions that we had up there, perhaps finding a bid anywhere between here and 131.50 is going to then produce enough momentum to actually break through that 133.20 area, with going back now to the daily chart, with the huge implications that would have, because if you look at it again on the daily, assuming that I'm going to find it, here it is. If you look at it on the daily, a breakout from this formation is definitely going to produce quite a lot more upside. In essence, 135.60 would be my first target if we actually clear that resistance. So I had two scenarios here. Obviously, the first scenario going directly there hasn't played out, which was anyhow my secondary scenario, because I said that, you know, I would expect an initial rejection from there, given the fact that we had quite a sharp move higher. Now we have the second scenario, finding a bid anywhere between here and 131.50, and then attempting to break higher and, you know, make it towards that level. 10-year Treasury note is blowing out. Yeah, 10-year Treasury is anyhow looking quite healthy. This is clearly a triangle, if you're asking me, and I expect this triangle to be resolved to the upside, as exactly the opposite should happen in the yields, because the yields have created the opposite type of triangle, a bearish continuation triangle, and I would expect this one to get resolved to the downside. And having to do with rates, I would then be looking for a move towards this confluence of supports near 125. So I would expect us to see levels towards 125% yield in the 10-year, and in the 30-year, more or less the same deal. I see a continuation formation here as well. I would expect the 30-year to break more or less at the same time as the 10-year does, and I would expect a move towards at least 1.8% in the 30-year yield, and we see what happens from there. So, you know, no matter which of those bonds you look at, you get more or less the same type of formations. So my main case scenario is a continuation higher in bonds, a continuation lower in yields. And under normal circumstances, because we've kept ignoring them for quite a long period of time, that would also imply a risk souring. Now, admittedly, during the past several weeks, the stock markets have been ignoring anything that has been correlated with them lately. So can I rule out that bonds are going to be hitting new, bond yields will be hitting new lows, and the S&P and the NASDAQ are going to be ignoring that? No, I mean, based on the recent price action, I can't really ignore it, but, you know, who knows? They might recouple once again with the usual correlations. Your answered those. Hi, Steve. What's your view on palladium in these levels? As I've said, unexpectedly, palladium looks like it is going to produce a new high after this period of consolidation. So I would expect one more high from palladium eventually out of this triangle before it actually produces a much, much sharper correction lower. So I indicated that this is likely a triangle when we got rejected from there, and this remains my main case scenario. So we might get the risk reward favors short positions here because we're approaching this triangle's resistance once again, and it is likely that we need to spend a little bit more time within this triangle before we finally blow out from it for one last move higher, in which case I would target probably 2,700, which is the 161.8% extension of the triangle's range. And then I would be looking at any failure up there. I would be looking for a much sharper correction lower, something like that. Coincidentally or not, it is the same type of formation that I see Tesla building. So there you go. Here is Tesla. This looks likely to be some type of a triangle. And that would imply that perhaps after some consolidation, Tesla is also going to produce one last high before, in my opinion, imploding lower. Question about platinum. Yeah, I've been looking at the wrong chart. There it is. Platinum, here it is. So, platinum, two scenarios here. I said it the other day, nothing has changed. Scenario number one, this is a triangle, and we should continue higher sooner rather than later. Scenario number two, this is a head and shoulders formation, in which case we should move lower. Now, why is that useful for you since it's binary? It's extremely useful for you because we're very close to support of the first scenario and my main case scenario that platinum might move higher from here as long as it trades against 950. So against 950, the bullish case scenario is probably preferable. Below 950, you should be looking for more weakness, at least towards 910. Okay, so that's what I think about platinum. In any case, 950 is undoubtedly a pivot. So against 950 and being close to 950, you have two choices, and it's 100% your choice which one of the two you want to take. Coach, do we have an interview today?
No, bro.
Oh, we don't.
Yeah.
Anyhow, I think I covered all questions for now. So since I need to attend to some electrical work here.
Yeah, go ahead.
Yeah, I'm gonna say bye to everybody, and we'll be back tomorrow.
Have a
Wrap it
great
up, Coach.
weekend. Have a great weekend, and I'll
not
wrap it
tomorrow,
up.
actually. Yeah, on Monday.
Oh yeah, I'll see you tomorrow.
yeah.
All right.
So have a lovely
Anyway,
weekend, everybody.
I hope everyone enjoyed our podcast today. And I know it's podcast, and this is for guys. Try this and see what happens. Serenade your lady. Love me tender, love me true, never let me go. Oh, my darling, I love you, and I always will. Love me tender, love me true, all my dreams fulfilled. 'Cause oh my darling, I love you, and I always will. Tell the people you love that you love them. They're not mind readers, and don't just count your pips, count your blessings. Everyone have a good weekend, and I'll be here Monday. Take it easy, everyone.